We're seeing like a mini uptrend when it comes to the markets after a month of a lot of volatility. What are you expecting today?
I think mini is the key word there.
Right.
So I think today, it's funny. If you look back, we're flat. We're flat for 2 years at this point. The S&P's kind of been stuck at 4,400. So I don't really want to get behind a mini uptrend or a mini downtrend. So I'm really in this kind of like stuck, not much to do. I think you can take advantage when you see individual stocks bottoming out in that kind of 2-year process. But I don't think you get behind the market strongly at this point. And I don't think you short it strongly either. I think you pick off individual stocks.
So you're kind of meh. You're kind of in between right now. So with that meh attitude right now, what's your WEX word of the day?
Okay, thank you. So my WEX word of the day is really where I am, which is impatience. And that's what I see the market being, which is it wants to go higher, right? Investors want to have exactly what you said. They don't want a mini rally. They want a mini rally that turns into a real rally. People have kind of been addicted to growth and gotten used to the past decade before the past 2 years, where we compounded at like 10+% a year for the previous decade, and they're used to that, and they think that's normal. So they're rushing the healing process, and they're impatient with how long it takes. But these rate increases that started about 18 months ago, those take a long time to move through the economy. Rolling off the Fed's balance sheet from that from the $4 trillion that was dumped into the economy, rolling that off and rolling that out of the economy in a healthy way takes a long time. Growing the S&P earnings to 240 from 220 where they are now, that takes a long time. Digesting a 20 times multiple takes a long time. And I have this sense that there's so much impatience behind it. And the impatience ultimately, if we succumb to it, it creates an unhealthy market that's just going to have really high peaks and valleys. I'd rather see something with a stable foundation. So I would say, can the impatience have a little patience, let this market digest all that's happened to it, and let us get back to a healthier foundation.
All right, so you're telling people to be patient, but at the same time, you do have a lot of clients, you get new money. So if you were to put new money to work today, where would you put it?
Right. So when you look at that and you say, okay, I don't know if the Fed's really dovish or hawkish. I don't know if we're really bullish or bearish. Then where do you find opportunity? In a market where I said before, I don't want to get behind the broad market, but you can find opportunity in areas where there's irrationally low valuations. So in our portfolio, for example, we just added VF Corp, which is the owner of Timberland and North Face. It's down 80% from its high. Meanwhile, it's trading at 10 times earnings. It's on the trajectory to return to normal earnings growth. I think your first guest this morning was talking about how the consumer is actually not as weak as people think that it's going to be, and the consumer actually has cash and wage growth is improving. And I'm sure we're going to get into JOLTS later. But if they're not that weak, then VF Corp down 80% has overly discounted a weak consumer.